All right, ladies and gentlemen, boys and girls, welcome to the stock market on a Monday. Thought it'd be crazier looking into the weekend. Turns out it's not nearly as crazy as we thought, but still a lot to go over. And as always, the main point of this is to go over names that you are interested in. So make sure you type those. I've got some chats open already. We're going to get some more chats open. Everything will be good. And ask away what you want me to look at. I'll take a look. In the meantime, I'm going to go over and take a look and show you guys just what's going on in the overall market. Because actually, it's pretty impressive. So I think it's good to start with. I know a lot of us just take a look at the SPY. I know we all like that as a nice shorthand. But in this case, I think the ES or the overnight futures tell a little bit more of an interesting tale. And the reason for that is right here. This is where we opened up on Sunday night. And then we just ripped from there. So right off the jump, right? And you go into a 2-minute chart. We'll have to go far back. This shows me that this is kind of institutional and algorithmic. When you see that type of down move that just gets reversed completely and entirely, I think that's huge. So when you see that kind of trading, that to me is really interesting because it just shows you that either somebody flipped on a robot at that time and said buy things, or they were just sitting there and they were waiting on that opening, which I think is what happened because most people knew. If you're looking at Bitcoin at the time, if you're looking at the news that was going on, a gap down made a whole bunch of sense, and then we just ripped from there. So now zooming out a little bit and just showing our hand here just a little bit more, we have on the SPY just an inside day. So we are inside today's range, which is inside yesterday's range, and we have to just hang out and wait for something to occur, which makes not the most fun time when it comes to just the trading side of things. However, it does make a really good time when it comes to the planning side of things, which of course should be something that we are more concerned about, right? We spend most of our time planning and then not so much of our time actually placing the trade. So I know there's a lot of traders out there, a lot of systems, like my systematic traders like myself and personal traders that just have a rule that when the market is inside like this, we just kind of avoid everything. So I'm going to be leaning on you guys to give me some cool stocks that are coming up. So make sure you put those in the chat. Now, in the intraday action, it's been more the same. Let's get off the 1 hour chart and do something like a 2-minute. We had this nice opening drive off the open here, and now we've been pulling back into that range, and now it looks like we could be bouncing a little bit here. So all in all, just a overall choppy day inside what is a overall range bound market, and then also inside that day as well. So everything's in, when you're inside a range and you're inside today and the market's shopping around, those generally aren't the day to really swing for the fences. Those are more the days to build your plan and to look at it and to research different stocks and set your alerts for what levels that you'd be interested in those stocks and all of that kind of fun stuff. And then when the market really gets going, at least you have a plan, because this range up here, right close to all-time highs, I think that could be like that for a while. We're going into the summer, right? I don't know if there's any huge positive catalysts that we're going to care about. It's all the way until I think mid-July where we have the next FOMC meeting. So again, just a lot of nothingness. And the reason I harp on this so much is just zooming back in myself as a young man trader instead of an old man trader. I would have done way better just overall as a career if I was able to identify these markets faster and do less when they came up. Talk about it all the time, hitting the gas, hitting the brake. This is one of those, you hit the brake, you calm down, you buy dips, you sell rips, you take profits, that type of thing. You look for mean reversion type plays work well in this environment. Not so much when it comes to trend following. So we're gonna avoid that. Last but not least, look at the cryptocurrencies. Bitcoin, interesting bounce. it would be very fitting if we just swept under this major support. You can see 101, say 100 to 101 was support back here, support back here. We kind of swept the lag here. Sometimes these liquidity grabs can push, potentially cause these kind of slingshot effects. One example that I always bring up, which is a recent example, is just look at ASTS, right? And ignore all that stuff, but it kind of looks the same, where you had support, it undercut that support at 18, and then it just ripped and doubled like in a couple days. Not saying Bitcoin is going to double in a couple days, but anytime you have these, a sweep of a support zone and then a rapid retaking of that support zone, that gets me very interested, because it just shows that, again, just like we were talking about with the ES off the open, there's a lot of people waiting for that moment to happen, saying, oh, I would love to have Bitcoin under 100,000, and then just started buying as soon as Bitcoin was under 100,000 here. So, all right, we'll go through these, and again, as always, ask questions, chat. This is your guys' time. I think it's super cool. You can come in, come in multiple days and get multiple opinions on your stock. Rocket Lab, I really like these space names, have been holding up really well. This one looks like your kind of typical cup and handle style pattern, basing at near highs. In the short run, we're a little overdone here. We've gone from 25 to 35, so we've gone up 30% in like 3 or 4 days. So, a little bit of a pullback or some sort of rest right here, I think would be absolutely perfect. But we do have this overall kind of cup and handle look, where you had this pullback, and now we're just kind of putting in the handle here. A good one to track with these is always UFO. So UFO is just an ETF that just holds a lot of these space and robotics names. Kind of looks the same, right? These things were very beaten down 2022, 2023, just picked up recently, but I don't think it's over yet, right? The more we kind of get this fight back and forth with Elon and his boyfriend and everything, that could cause a bit of a problem, right? We could have the bromance breakup being good for some of these stocks, and we saw this here with ASTS. This was the bromance breakup was kind of right in this zone, just to show maybe they're going to get some more contracts. And that's what you want to pay attention to. Like, if you're someone who's trading a biotech, then it's really all about phase trial results and what they come out as. So do you have a phase 3? Does the data in the phase 3 look good? Great, then the thing's probably going to rip. And if it's bad news, then it's going to tank. With these guys, it's just contracts. Okay, are they going to be able to to get more contracts from the government or get more contracts from other companies that are launching things in the space? If so, great. These will be great trades to be taken. If that kind of dries up, or they stop getting new contracts, they go to somewhere else, that's, again, what you want to focus for, because contracts for them is just, that's how people are valuing these companies and just saying, okay, I expect it to make something in the future, not now. Right? So these aren't being priced off what it makes now. These are, again, being what they price later. CRWD, CoreWeave. CoreWeave has just been insane since its IPO. So I talk about this all the time. There's like roughly 80% chance an IPO undercuts its IPO price. And then it did that and just ripped. It comes very hard to do technical analysis on something like this, just because there's obviously massive demand for it. From the low of its IPO until now, it's up 400%. So 4 times your money. To me, in all respects, this thing is overdone. It's just it's overbought. Overbought doesn't necessarily mean it goes down. And same with overvalued doesn't necessarily mean it goes down. What can happen in some of these cases is you can have the sideways chop. So you can have a massive push up, and then you get overbought or overvalued, and then it chops for days or weeks or months or longer. And then you have all of these oscillators start to recover, and then you have valuations potentially catch up if they continue to perform as a company. Right? Price of the stock goes sideways, but they're making more money or doing better as a company. Well, then the valuations readjust as well. So not something I would buy up 400% in a month. It's just not something that I'm ever going to bring myself to do as a trader, buy something that's up this much, but I wouldn't short it here because it could certainly continue. If anything, I would just bet for some sort of chop on buying on a pullback, right? $100 seems reasonable. That's a huge smack from here. Could happen. It rallied that hard, so it could certainly sell that hard. But yeah, for me, it's not just a no touch, a no trade on this one guy. This guy, GRRR is something that the people talk about every time. Every time I get asked about this guy. I don't know how a technology packaged software, I don't know what they do for software, but looks like they had some positive technology shares advance after Q1 revenue doubles. So it looks like a nice little pop up that's getting give way now. That's not what you want, right? You obviously don't want good news to get faded this hard. It means some people up here are starting to take profits. This part of GRRR looks very, very toppy to me. You call that inverse head and shoulders or whatever it is, but it seems like you have to kind of get up there and stick that landing above 30 in order to get interesting to me at all. What I will warn about is this is one of those stocks that every time it seems to rally, eventually it comes crashing back down. This has been the longest it's held up for a while. So might be that it's finally changed and might be on its way back up. However, this is really bad to me because the way I look at it is that if you have a big gap up and that big gap up is because of some sort of positive catalyst, you shouldn't give all of that back, right? So if you don't want to give all of that back, if we kind of get into this zone, it will probably move lower. And the amount this moves on a percentage basis, that's pretty substantial. So yeah, just be very careful there. NZI. SMCI. Oh, HIMS. Yeah, so HIMS had a contract pulled, and that was not ideal. It's still up way better than it was around here. I think this was when they got the contract right in this area. So it's kind of giving back not all of that action, but some. That would make sense if they got the contract and went up from 25 to 30 and then they didn't get the contract and it went back down again, then it makes sense it should retrace most of that value. This is another one that I really like the look of the long-term chart of, as long as it stays above this 25. However, this is a lot of damage, and that damage takes a long time to potentially heal and to repair. You don't want to just get damage like that, and unless they get another contract from another dealer, then maybe it'll go back up, but I just doubt that's going to be the case. So I think this haircut is probably something you want to deal with for a while. After a large gap like that, you want to kind of take a deep breath, take a step back, figure out potentially where things could go to next, and then execute. You never want to react on the day of a gap up or a gap down, right? You just want to give it some time to kind of digest. But we're under all of this area right here. The chart looked amazing on Friday and then just got killed today. So again, this is a no touch for me. I think until you're back up into the 60s or back down into the 20s, which is insane to say, it's just a huge range, you just kind of, away you go, right? SMCI. So again, I always have the I don't want things that the DOJ has investigated in my portfolio. It's just a pretty hard and fast rule for me. And this one's no different, right? I never want to really trade this one, but I look at this and I look at the semis, right? Semis are basing right near highs, not all-time highs if we look at this kind of blow off top, but between these prior highs, this massive support zone it's had in this area. So this is the semiconductor index. So then if I think semiconductors are going to break out, I probably want the best ones. I probably want, this kind of, I know SMCI is not a semiconductor, but I'll show you in a second. It moves just with it. The reason for it is it's a play on the whole AI, the old AI scope is what SMCI is. So NVIDIA is obviously going to be kind of best of breed. Then SMCI, it's not even, it's got a 3 times to get back to its prior high, which is where the rest of a lot of the AI related names, they are. Look at CoreWeave that we just talked about, and then look at NVIDIA. The fact that this thing can't get going when the rest of them are means that it's relatively weak. Relatively weak, I'm not super interested in. And then we're just inside of a base here. So zooming in for a short-term play, if you got above this base at 46, maybe it takes a shot here at 64, which is on a percentage basis dope. However, that's you're buying something that is being investigated by the US. Again, there's just a very kind of hard and fast rule I have about no thank you. I just don't want to be on that side, because even if they didn't do anything wrong, the government can still like kick down their door and shut them down for ages. And CAVA, I haven't seen CAVA for a while. Haven't heard tale of it. So yeah, this is a new IPO. This is one of the most perfect examples of playing IPOs around their anchored view app from IPO. And I know you guys have Brian Shannon on here. He's the king of this anchored view app stuff. But essentially, this is the average price of the average market participant in CAVA for its entire life. And you can see when it got through that in the 45s, it just ripped to 150. It was crazy. And now it's back below that again. So the first thing I'd want to see it retake is this 85 bucks before I'm at all interested in it. It's at support, some support here. That's fine. A little bit of a bottoming tail today, but until it can get back above that price, I don't think it's a momentum play anymore. So if you're buying it here, you're buying it as a potential like value play, which is fine. There's nothing wrong with doing that. You just need to know that with these potential value plays, there's just a good chance that they take for absolute ever to play out. Right, so it could be in this base for a really, really long period of time. Still doubled almost from its IPO price, but yeah, once these things crack, sometimes they take forever to get going again. So like Elf is a perfect example. This was another one of those that this thing just like gangbusters, and then when it broke, you just kind of want to stay away, in my opinion. And CELH is another one. This is another, just they make energy drinks. What could they do that's so great? But they did this insane crazy run and then broke here in the 2020s and spent a long period of time trying to get going, and then here it happened again, and then it broke, and then nothing. So it's when you're playing momentum plays, there's nothing wrong with momentum style trading or investing, where I'm going to look for the thing that's hot, I'm going to get involved, and I'm just going to ride that trend as long as it goes. Like we just talked about with HIMS, like we talked about there with a lot of these other names, when these things break, it's generally over for a long time, and it could take years for it to kind of reevaluate. Could Celsius ever become that thing again? Maybe, but you got to think, and again, I'm not a CFA by any means, but you just got to think of valuations, right? This thing was $1 a little bit ago, and it just ripped to 30 bucks. It's huge. And then it just spent years doing nothing. And then it popped a little bit more, and then years doing nothing. So your goal is, if you're a momentum trader, is to buy somewhere in this momentum push. And then as soon as it stops going up, you get out and you move on with your life, right? It's the biggest trap, I think, for people playing momentum type names is you just have to be able to kind of get over them and say, you know what, it's enough, right? I took my trade. Away we go. So yes, Celsius could maybe eventually get back here, but it's not doing those like huge moves that it was, right? IREN. Iron Limited. This is nothing. And there's nothing wrong with kind of looking at a chart and say, I see nothing here. I see absolutely nothing here. We're inside of a range between 14 and 5. Yes, that's a crazy range, but it's a range nonetheless. We're up pretty big. We've doubled here just from the lows, but we're inside this range. So for me as a technician, there's just no information to be gleaned when we are inside of a range like this. You know, I need a big break to this side or a big break down, right? Big breakout or a big breakdown. I just can't by any means just have an opinion on something that's just doing this. This looks like probably one of the hardest stocks on planet Earth to trade. It's even when it moves higher, it does so in such a jagged fashion that even, you know, unless you just bought some around a buck and you're just holding in, congratulations, you 10x your money. But yeah, it wasn't easy on you. It had a couple like 70% pullbacks on the way up. So it's another thing to look for if you're looking for trades and investments. If they're long-term investments, so you're not going to check, it's just something you buy because you like the company and you're going to walk away. That's fine. That's one thing. When it comes to names like this, if you're going to be momentum trading them, you got to get away when they're choppy like this. ASTS just talked about there. These look amazing, but obviously overextended in the short run, right? Just 100% up in pretty much a straight line. This feels like shorts getting clobbered, and right every time it down ticks, there's a bunch of shorts that have to cover. The last I checked, ASTS had like a 30%. I believe it was like 27% short float, which just means that they have to cover. So when they do, you get moves like this. So wait for the next short float data to be released on this one, because it will show you that yes, we have they have covered shorts or they've added to it, and then it could go even higher. But this feels very short squeezy in this area. So I wouldn't get too excited and to buy. I can't buy a stock that's doubled in a little bit. So if it pulls back, one thing to do is just to take an anchored VWAP from this level. Say, okay, the average market participant in this massive move up sitting around 34 bucks. So if it pulls back to 34 bucks, that might be an interesting place to take a shot. But just, yeah, what a move. What a crazy move. Oscar Health. Huge level up here at 23. I just rejected off that level. You can see I'm not a big pattern guy, double tops or head and shoulders or anything crazy like that. But obviously, a lot of sellers up here at kind of 23, 23.50. Got just shy of that before it fell here. So it could be one of those names where, yeah, this is going to be a brick wall for it and it's just not going to get through. For me, I would just wait. If it does get through this price, I'm punching in. If it reverses from this price, I'm out. I think a lot of these healthcare names might be kind of dinged just a little bit today because of what happened with the HIMS and the Novo Nordisk. That just might put a little bit of a cooling effect on these things. Lilly, right, liked the news initially and then sold back down, still up a little bit from it. So might be just one of those. Let's take a breath on healthcare names for just a couple days until everyone forgets about what just happened. HIMS was already talked about, but it's a lot of damage. Unless you see it up in, you know, the 50s in the next day or so, I think this guy's kind of dead in the water, at least for a little bit. Do I think it's going to go back to 25? Probably not. But is it going to go rip back up to 75? Probably not. Which just, like I talked about with a lot of these momentum names, you got to trade them while the getting's good and then get out. Even something like Palantir that is still ripping, you can see when the momentum stops, sometimes it takes like a year for it to get going again, even on something that it does get going. And most of them never will. They'll have this momentum move, they'll fade from favor, and then they're right back. They're just there forever. TDD, the trade desk. So many gaps on this chart. Massive gap down, sold off for a long period of time, and then a massive gap higher. So it's holding that gap, I guess. I don't know what this initial gap down was, but the gap up is doing well. So in this zone right here, we're holding on to that up gap. As we've pulled off here, we're holding on to that up gap so far. So for me, trade like this becomes simple. If you like the stock for whatever reason, you're buying as long as it holds this gap. If it comes back and closes the gap entirely and it's probably going to continue to sell lower. So I'm not one, all gaps must be filled. I hear somebody talk about a lot that, oh yes, there's a gap here. That gap needs to be filled. I don't think there's any evidence. I haven't seen any evidence anyway that that is at all true. That gaps need to be filled until I see that evidence. I'm going to do, at some point when I can find time, I'm going to do my own study on it. So I'm not one that gaps need to be filled. In fact, I don't think you want them to be filled, right? You want whoever bought because of that earnings report to be very, very sad that they missed, and they want to average down every time we downtick. You want that aggressive. You want that bid. You don't want the gap to get filled. At least that's my opinion on it, right? Any Sphere 3D Corp. Ooh. Okay, yeah. It's always good to zoom out on this. If the company ever shows that it was $10,000 a share, unless you're looking at Berkshire Hathaway, it's not $10 a share. It's just a really bad company. So I look at this and I instantly know this company is bad, and I have no idea what they do, but it's just bad. What's happening here is every time they get under $1 to stay listed on the exchange, they have to reverse split, and they have this horrible history of doing reverse split after reverse split after reverse split. So I think this company is a zero in the long run. And they're going to have to do the same thing here soon, where they still can't get their share price over $1 naturally. So another reverse split's coming. So just go back and look at every time there's a reverse split in the half. You had a little bit of a rally and then tank. Right? And then let's take a look at this. Go back. We're just looking for these orbs. Yeah, you had a little bit of a rally and then tank. So this is a company that unless they can figure their stuff out and become a company that's not awful, is going to continue this reverse split crash, reverse split crash, reverse split crash over and over and over and over again. So not something that I would touch with my money or anyone else's. CrowdStrike. Speaking of something that I have touched with my money, I own some CrowdStrike. So just so my bias, I'll always try to let you guys know. I sometimes may forget. I will always try to tell you. I may forget sometimes, but I'll always try to tell you when I own something. So the CrowdStrike is super interesting because you can see I already have it drawn out. This is these prior highs at 450. This, I think, is where was it here that they ruined the world? There was that one day that CrowdStrike broke and the whole world exploded. But they're well above that now. Every pullback to 450 has been bought. You can see it a couple weeks ago. You can see it again today. They are buying 450 every time we hit to 450. That's exactly what we want to see. Is just a purchase each time at 450 there. So yeah, I like it. But full disclosure, I'm in some of this. I'm also in some Hack, which is a more broad ETF on cybersecurity as a whole, because I think cybersecurity is great. One of those themes that I'm excited about, just because if defense stocks are going to do this, which, from right here, from the tariff tantrum lows to highs up 52% in a single move, then great. where is that money going to go to? If we're thinking defense and defense names get overvalued, I think it goes to cybersecurity because, if you're everything's drones now, what's the meme, right? Everything's a computer. We have to pay attention to where we're going to be spending that money. And I think we're going to be spending a lot of cybersecurity, things like that. It's probably why Palantir is doing so well. So really like CrowdStrike, really like the Hack ETF. But again, I'm just talking my book here because I own some. And more questions too. Again, I see we're getting caught up here. So if anyone wanted me to look at anything, make sure you go here as well, right? EONR, never heard of this guy. So let's see. 50-cent stock. Yeah, this is another one of those. De-SPACed at 10 and then just completely fell apart. So this is some sort of oil type company. I can't, in good conscience, invest. I'm not a value investor, so I haven't done this is overvalued for this, and this reason. I'm just not smart enough to do that. I don't know where that value is. I do know if they can't get their share price above $1 fairly soon, they're going to have to do all that reverse split stuff that we saw there with any. And that's not what you want to see, as we saw with any. So this held on for a long time to that dollar, and now it's kind of dipped twice below it. So there's really nothing technically interesting in this name, but if it gets through this price, this $61 price, and holds, that was prior resistance back here. Seems like there's a seller around 60 cents right now. So if it can get above 60 cents and hold, this could move. I see that's in the oil space. So if it can't move with the fact that oil prices are actually up a little bit, I'd be a little bit worried about that kind of overall. NTC. Yeah, the dog Intel. It stopped going down for like a year. Again, I just said I'm not a value investor and I don't like to buy things off lows, but there is something to be said for, I don't want to say good companies, but let's say established companies, companies that have earnings and make money. When they get killed so hard, but then they stop going down for a period of time. I think there's really something to be said about that, where this just sideways base for this incredibly long period of time kind of just tells me that maybe the sellers have given up. Maybe they've gotten tired. They no longer want to sell this name down. So I have been debating this for a while. It's not so much that I'm worried about losing a lot of money taking this play. It is just more about the fact that I have to question myself if I want to go through the pain of actually holding what could be a dead stock for a while. And that to me is almost as painful as losing money, because we all only have so much buying power. It doesn't matter if your account's 10 million or 10,000 or I don't know, $10. You only have so much buying power. And the question you always have to ask yourself is this something that I want to spend that amount of buying power on and potentially have it just chop sideways? And that to me becomes something that is pretty problematic. So basically what I'm saying is I don't think that Intel is going to go much, much lower, but it could be here forever. It could be here for another year. And do I want to just hold it and hope that eventually it moves higher? I don't know. So what I'll probably end up doing is just waiting to see if one of these 27 breaks actually hold. Does it hit 27? So say you've done that. I would have rather taken a small hit when I tried up here and a small hit again and a small hit again, and had that capital back to do something else with, I would have rathered that. So I keep, and I'm kind of talking to myself here, because yeah, it just becomes hard to go, okay, what do I do with something like this? Again, I think it's probably found its roughly its low. It's my bet for a period of time. But is it going to take 2 years for this thing to, get back to like $30? And then it's like 2 years for a 50% gain. I would hope over the long run I could do a little bit better just having more access to that capital. JBLU, JetBlue. So airlines suck just in general, not just JetBlue, but just right, this is from 2020 to 2025. Airlines have gone absolutely nowhere. It's just not a great place to invest overall. Now, however, JetBlue is kind of interesting because it has this 350 support. So if you're looking for a short-term play to buy off these 350 support, that might be a good play. But it's the same, I'm going to give you the same rant as Intel, save it, but you just heard me do it, is that let's go to a weekly chart, right? There's massive support here, but it hasn't really moved. If you were invested in this company since 2003, over the last 20 years, nothing. You haven't made anything. You haven't lost anything, but that's just crazy. So do I want to spend time and energy looking at something like this for any more than hey, it's at 350 again. I think it could potentially bounce to like $4 or $5 here, and I'm going to take that shot and move on. Yeah, maybe you do something there. It's just not something I'm going to really go after for any sort of a long-term type of move, just because there's nothing I see here. There's nothing, there's no way I see to kind of get me out of a trade for any decent amount of money, right? So that's one thing I always encourage people is dead money is almost as bad as losing money. Because at least you lose your money, you take your stop loss, you go, that's unfortunate. I wish I hadn't take that stop loss. You move on with your life. Dead money, you end up like convincing yourself that you're really, I'm a value investor now in a great company. So always look for what catalyst, not only where are you going to take your profits if you're right, where are you going to stop out if you're wrong, but then you have something that's called a time stop, which is very, very common in systematic trading and quantitative trading, which is what I do primarily. It's how I have the time to sit here and wax wise about the market. Is most of the trading I do is with bots. And I use quite often with those a lot of time stops, right? Here's your profit target, here's your stop loss, or your profit target's a trailing stop, or however you want to do it. However, I always put in another avenue there, which is if you're not up a significant amount of money in a period of time, just kill the trade and just give me my buying power and move on from there. So if you're going to do something like this, I'd say the same thing with Intel and the same thing with JetBlue. Just have a stop loss, always have a stop loss. But when you enter any trade or investment, where are you wrong and where are you going to get out? Have your profit target or whatever your exit method is. By profit target, I also mean, use a moving average for trailing stop, use a traditional trailing stop, ATR trailing, Bollinger Bands, whatever it is. Find your out method, and that out method should also include something if you're not up money in, you'd say, a week or something, and you just write that down. If I'm not up money in a 1 week period of time, I will get out of the position. Or if I'm not up money in 1 month or 1 year or whatever it is, it can just save you so much. So you just don't have a zombie stock that's just eating up your buying power and not contributing anything to your portfolio. Main Street Capital Corporation. This is an interesting one. Nice little tight base here. It's kind of unfortunate it's on the low end of this base, but nice little tight base here after a pretty significant bounce. This one's at least paying you to exist here. That is another benefit of Intel that I'll say is that you are just getting paid while you wait. better than nothing. Better, better than a lot of traders make. Just getting paid a little dividend to wait. So with Main here, this Main Street, this zone right here, you can see resistance here, support, support. So if this holds 57 and starts to move towards 58, that could be a little bit of a good trigger to potentially get you to these new highs. If we lose this zone right here, this 57, we could definitely give it back. So that's something we have to be very, very careful of. INTR, Inter instead of Intel. This is something, you know, I was just talking about how, yeah, it's important to have a catalyst and everything. This is something that fits that bill exactly, has a reason to potentially get into the trade. And that reason is that it's really close to all-time highs. And the last time it did this always always study history. That's what we're doing as technicians, right? Last time this thing had an all-time high and got back to it, and eventually it did a nice little pop, right? This $4 to 6 is a 50% gain. That's a decent gain from there. Looking kind of like the same pattern, doesn't it? Where you had this, you know, massive drawdown, but it came back. Didn't have to do any shenanigans about splitting its share price or anything like that. Same type of things coming back. So this is a bank. So don't expect it to quintuple or anything. But if it gets to that price, that's interesting. And just like we said before, it pays you a dividend. At least this is an annual dividend, right? April, February. Yeah, maybe an annual dividend. But at least it pays you there. But this is the kind of stuff you look for. So you could design a trade, just to go on our conversation about time stops. You could design a trade to say, okay, if we break out of this little base, I'm going to buy some, but I'm going to put a time stop. So I'm going to give this a month to break all-time highs. And if it doesn't break all-time highs in a month, I'm out. And then I'll buy it back if it breaks all-time highs. And you see how now you have a plan to recap, you know, get that money back in case it didn't break all-time highs, but it didn't hit your stop, which is probably down here somewhere. And it just did that for like 2 years. Right? And the important thing is you do it in advance. You're not in the stock saying, do I get out of this one? It's not moving. What do I do here? This thing sucks. You have in advance, I want to, again, take that trade. Lucid's not bankrupt yet? I thought they were going bankrupt, or is that the other one? Fisker went bankrupt. This one's probably pretty close. Yeah, hemorrhaging money. Just cannot keep it going. So you're at support. If you like it fundamentally, it's a decent place to take a shot, and you should know you're wrong under like $2 a share if you want to take a little bit of a shot there. But it's like the theme. If we had a theme today, it would be like, make sure you don't have dead money, because it seems like that's kind of the same thing that's potentially happening here, where this could just be dead money. It could just be this chop sideways until maybe one day they sort their stuff out and they get to like $4 or $6, or they go to zero, because right, well, there's a couple of these, right? It's Fisker, it was Ride. There's a couple of these guys that went under. So the other thing that I would very closely look at is, because they're hemorrhaging money, you have to start being a little bit of a financial analyst and start to look at how much are they hemorrhaging, and what is the cash effect of that, and how long do they have before they run out of cash. And you can do that pretty simply, right? So you can go, there's a way to go, where are the financials? Technicals, seasonals, more financials. Right, you can look at these pretty simply, right? You don't have to be a CFA or anything to get into this kind of stuff. You got to look at, okay, this is their net income. So you just need to look at that and say, yep, they're losing a bunch of money. They've never made money, and they're losing significant amounts of money. They're losing $3 billion a year. So let's keep that number in our head, $3 billion a year. And then you look at, say, okay, where do they have cash? So in short-term assets, they have $4 billion. We don't really care about long-term because that would be factories, IP, all that stuff that I don't really care about. So you're losing $3 billion a year, and you have $4 billion in short-term assets. So you will need to sometime in the next couple months go to your shareholders and say, "Hey guys, give us money," and they do that by diluting you, by doing a public offering, selling shares out. It's just how it works. They dilute shareholders. When companies need money, they have to get it or the company goes bankrupt, and they do it through dilution. And they're the undisputed champion of the world in dilution is AMC. And this is what a chart of a company with poor financials that dilutes its shareholders looks like. They have to continue to dilute because they don't make any money. And until the company turns profitable, what do you do? So AMC is probably going to go bankrupt at some point unless they can change things around, which, what are they going to do? Invent movies 2.0? So be very careful, right? There are times to invest in companies that don't make money, and that's when they're momentum names. Quantum computers. Quantum computing ETF. Let's just do QBTS. These companies don't make any money. However, their prices are going up. So that means they could do little offerings and not really mess things up. So again, these are good companies to invest in. These are good companies to trade, I guess the best way to put them, when the momentum is hot. But like we talked about, there will be a moment in which the momentum is not in these names, and you're going to have to move on, because unless they actually invent a quantum computer that they can sell, then at some point they got to come out with their hand open and say, please give us money. And that will force the price lower. So when you're investing in really money-losing companies, that's a big one. And it doesn't mean to never invest in money-losing companies. One is momentum, like you're seeing here. The other is that you think that they're on the verge of something that will turn them profitable. So for that, generally you think of like biopharmas, right? So this company loses money now, but they are within 6 months or a year, whatever it is, of what I think will be a drug that will get approved, and then the company will either get bought out for a lot of money or will make a lot of money because of that drug. That's another reason to invest in those things. So BB. So here, as the Canadian, right, I gotta say, I hope BlackBerry does well. It probably won't. It doesn't generally have a history of doing well. This one's stuck in a range as well. I know this was one of those meme stock favorites, but none of the meme stocks are doing well. So this is like a 5th generation meme stock. So I don't think it will do very well either. For this one, it's, if you're above 450, maybe you can see the zone I have highlighted here. If you're below 450, probably not. I think you keep it pretty simple like that. AUR, Aura Innovation. The low end of its range, this looks kind of toppy to me. If you draw this out as potential, right, inverse head and shoulders or rounded top or whatever you want to call it, this one looks a little toppy, right? Rounded top, got some support going on here. So you got a line in the sand coming up, right? If you like the company, I think this is if it's above $5, I own it. If it's below $5, I'm getting out. I think that's kind of how you summarize a lot of that down. I think would make a lot of sense. But yeah, it's an interesting looking chart. But this, to me, if anything, this looks pretty toppy. EB. Eventbrite. Oh, I just as someone who goes to some of these events, I just hate the product. That's completely besides the point when it comes to the trade, but I just find this so annoying when you have to download that little app and that's how you get into the thing, and it's generally obnoxious. I've never had it work well. And the market seems to agree because this thing has just been on its way down. So this is another one where you have to kind of ask yourself the same question. Say, okay, you lose money and you lose money at a pretty good clip. So how much money do you have? Let's look how much. They're about break even. They lost 15 million this year. So congratulations, little break even there. And they have 600 million. So this is one of those that this is way better financially, even though it's a money losing company. At least based off their current burn rate, they can hold on for a long period of time. So that to me makes it a little bit more interesting. So maybe if it gets above this 260, you take a shot, put your stop at $2. If you're right, maybe it gets to $4 or $5. And then if you're wrong, you're out at $2 and you kind of move on. At least when you look at something like this, though, you're not like, okay, this thing is at the verge of bankruptcy in the way some of these other companies were. APYX. Just range bound, did a nice little bounce, saved itself off that $1 area. Again, I think that's always an area that you really should watch out for. If it's right, if these zones are going to hold, or these $1 area, you can see how it's bounced there a couple times. We talked about a little bit earlier why $1 is important and impactful. For those who miss it, it's just because if you're under $1, you have to get delisted from the exchange, right? So the fact that it can kind of stay over $1, I think is super interesting. The fact that it did it without a whole lot of trickery, I think it's good as well, right? So this is I can see there's some FDA talk here. I just see FDA clearance. So just know that, right, if you're playing that game, that's the game. You're stuck into the will they, won't they of the FDA. However, yeah, it's a good look. It's a decent looking company. It's a decent looking stock. It can hold $1 on its own. I think that has to be your exit because as we saw before, you can have this downward spiral of, right, it hits $1 and then it has to reverse split and then it hits $1 and it has to reverse split all its way. Those are the companies you want to avoid. VSTM. Completely falling apart here. It's down over half in a couple days. They must have said something that they really don't like. I don't know what it is, though. I don't see anything here. So yeah, I have no idea. Health technology, bio, but anyway, down over 50% in just a week or so. Not the place that I want to catch a falling knife, but you've got some support here at 450. So maybe you take a shot there. You say, hey, if it can get back above and hold 450, I'm interested. If it closes below 450, I'm wrong and I have to go. Makes sense as a way to take a shot. However, this is not a great company. It's a $140 company that's now a $4 company. So whatever they're doing is failing and failing pretty hard. So ADM, Archer Daniels Midland. I see. I even remember the name of that one. I like patterns like this. This is an interesting little zone, and I do like patterns like this where you have a pretty clear area around $45 or so, and then just spikes below and just rips back up. I know this is the whole tariff tantrum kind of nonsense, but when that happens at this zone, I think it puts more faith in this particular zone right here, because anybody who's shorted as it broke down and didn't get out will probably cover in this area. Anyone who's sold out as it broke down, right, they'll probably defend that zone. That puts a lot of people that are potentially defending a little bit of a zone here. So yeah, that looks nice to me. Nice push up. I think you're just looking for how deep does this pullback go. You don't want it to go too low, but you would like it to pull back just a little bit there. You know, this isn't a company that's going to quintuple or something overnight. It's not a biopharma or something. So you just want to make sure that you're getting good prices on pullbacks for these slower companies. I think that's super important. We got a few minutes left. Let's take a look at what's happening here in the market. Something bad news-wise probably happened right here. You had a little bit of a flush down, and then we bounced. So it's the question is, do we hold this bounce and then push higher from here? I don't know, but that's something I think we need to focus on the end of the day. Just note, again, we are range-bound here. So I just wanted to check back in on the market. I just saw a lot of sell off and then bounce over here on my other screen. So must have been some sort of, I don't know, news event, or there's a Fed guy yapping. Those guys love to chat about whatever, or more Iran stuff, but not really like we care. And we're kind of over those things, right? Iran is positioning its missile systems. Yeah, again, I don't think that surprises. Again, you always have to separate. Obviously, no one's a fan of war, right? But you always have to separate what you think should affect the market and then what actually affects the market, right? What actually affects the market is things that are a surprise quite often. I don't think it surprises anyone. I think they've been very vocal that they're going to strike back, and I don't think that's going to shock anyone. So, right, you're looking for events that are surprising. And even then, you know, it was surprising to some that the U.S. entered the fray here on the weekend, and the market is flat on the day. It was down 1%, and then, like I showed in the beginning of the stream, a lot of people just bought right off that dip because it wasn't that big of a surprise. So we need to get surprise stuff. Kirkland's is interesting. Is this the same Kirkland's that's all over Costco? Because if so, holy smokes, they've just been on the down and out here for a while. $1 again is the area to potentially hold. Kirkland's to shutter store. Maybe it's a different thing. I'm just thinking of the Kirkland brand, whatever. Shuttering stores obviously isn't a good thing, right? If that's the top news report they have here. So convert locations to Bed Bath & Beyond banner. Okay, so you're getting wrapped up with Bed Bath & Beyond, which is bankrupt. That's something else that's worrisome. So there's nothing here that I would take a trade off of. As soon as I see Shutter Stores and Bed Bath & Beyond in the same sentence, that gets me slightly worried, because as we know, Bed Bath & Beyond is bankrupt. Not if you check with the people on Twitter that still think it's coming back. If you ever want to think that you're a failed investor, just go search up the Bed Bath & Beyond hashtag there on the internet. There are still thriving message boards about how they're going to make all their money back based off this company that's going to reform and somehow give free money to old shareholders of a bankrupt stock. The cope is real. Yeah, look at something down, right? If it's down 99.96% and unprofitable, oh no, this one makes a couple bucks, so there's something. But if it's down 99 point whatever percent, it's probably for a reason. For me, it hemorrhages money. So this is probably on its way out. And if it's not on its way out, if it's ever going to get back to 40 bucks, it's going to have to get like through $5 first. So I don't think you have to like aggressively chase names like this. You can kind of let them develop, and then if they go under, you're not involved. If they don't go under, you are also not involved, right? So just be careful out there. And again, just to reiterate with my last few minutes here, we are inside of a range that is inside of a range. And in the market, even today, we are just kind of chopping sideways for the entire day. So when you're in a range, that's in another range, that's in a larger range of this pre-market highs to lows, just make sure you're able to tell yourself that and to understand. It's a good time to make plans. It's a good time to set alerts. It's a good time to read conference calls, or if you do that kind of weird stuff, go right ahead. But it's just not time to get super active, right? Take your time. take a break, get all your ducks in a row so that when we finally break out and we start making new highs again, you've got a game plan of things you want to buy. So thank you all for coming by, and I will talk to you soon.